Welcome back to Intables, everyone. So I'm going to go up to you guys in the S&P 500 again. This is the SPY. We have a very large reaction engulfing candle to the downside. Not exactly what we wanted to happen leading into this week's FOMC meeting. However, very much expecting it. More so as we did have again, 82% chance of a 75-point base rate hike, and not exactly much of a chance of a 50-point base rate hike on that decrease in hikes. And as you guys can see, we did bounce back as Powell was speaking. And as you guys can see, we did get this engulfing candle to the downside after, again, Powell mentioning possible corrections of a housing market to come. Also mentioned that we need meaningful downward pressure on inflation. Again, overall reacting to the downside as he did not mention anything new from our previous FOMC. So we did get this momentum down to the downside. And as you guys can see also on the daily chart, again, we did mention this yesterday that we could have a possible engulfing candle to the downside if we do not have a good outlook on a possible decrease in Fed hikes. Again, as you guys can see, again, getting this engulfing candle. So the question is from here, as we do have this gap that we have possibly to fill here, will we hold up? I'm going to go over exactly what we're looking for here. Now, before I jump into this, if you guys can do me a huge favor, smash that like button, hit subscribe if you want to see more chart updates on potential breakouts that I mention every single day throughout the week. And if you guys are day traders or you are looking for very volatile breakouts that we mention every single day in the Intables room, for example, if you guys did see, even today is high risk as the market was, we mentioned a higher risk play with Moho testing 15 cents, jumping all the way up to 20 cents on the day, and then jumping up even to newer highs, going to extended hours. We didn't mention this breaking into new highs going to extended hours because, again, going to extended hours, higher risk as we did have Powell just speak. But again, a nice continuation from 15 cents, a higher risk play. However, if we were looking for that continuation on momentum, getting confirmation, and as we did have our EMA lines crossing up here on the 5-minute chart, getting more strength here to the upside. So again, a very nice run on confirmation here in the Intables room. If you guys did play that, I personally did play this one. So again, if you want to see these major breakouts, go to Intables.com in the description below, and you will never miss a breakout alert today again. So jumping into the daily chart with you guys here on the SPY, I'm going to go over 3 things with you guys: candle structure, how much pressure we have, and what is our relative strength. Do we have room to run to the downside, and what exactly would have to happen for us to bounce back? Well, as you guys can see, after our momentum candle to the downside, again, Powell, pretty hawkish, not exactly the best outlook, mentioning, again, that possible correction on housing markets that possibly do need to come, and also not exactly giving us the best future for a possible decrease in rates, as he did mention in the beginning. Again, we did have that spike at first when he did mention that possible decrease in rates at some point, somewhat bullish, but then we did get that bearish comments with the housing market, and then we did have that major pullback, and then we also did have that follow through as we broke under lows of the day and also below our 380 support level that we did mention from yesterday. As you guys can see, dropping just below it, an engulfing candle to the downside. Again, our body of our candle covering our prior body to the downside. Now looking at our strength, as you guys can see, again, on the MACD, we do need that continuation on decreases on sell pressure. We did mention, again, a couple days ago, we got a white shaded line. We needed a continuation on that white shaded line. As you guys can see, when we did get that continuation on decreases in white shaded lines, we did have a nice bounce. As you guys can see, gapping up, a nice bounce here. However, with our 20 below our 50, we did get that false break here, continued on lower. And as you guys can see, with this rejection that we have been mentioning on the week and our increase in sell pressure, we have been continuing on lower. And as you guys can see, still getting an increase in sell pressure. Also mentioning yesterday that it was very high risk to even play to the upside because, again, we were pointing down. We still needed to point up and get higher lows to digest to the upside. That's what we would be looking for to continue on higher. That is still what we're looking for, is to see if we can get that decrease in sell pressure. Again, getting these white shaded lines continuing on lower to show that we are shifting in momentum. And then again, getting our EMA lines to cross back up our 12, back over our 26. In my opinion, if we do get decreases in sell pressure, even if we continue on lower, again, with the gap fill increasing in sell pressure to the downside, we could have those white shaded lines coming in shortly after, possibly on a bounce. And again, we could possibly bounce above lows of the year. We will see if we do get that confirmation on decreases in sell pressure to see if we can get our EMA lines to cross back up. Now, looking at our relative strength here, as you guys can see, we have been talking about how we are not oversold, how we do have room to run to the downside. And as you guys can see, we do still have room to the downside as we are not oversold. In my opinion, if we jump into oversold territory, just like before, looking for bullish divergence, we could possibly be looking for triple divergence at this point, since we just had bullish divergence about a month ago that we did mention on a bounce back. I think it was about a month and a half ago. And then again, looking for that confirmation to see if we can jump out of our bullish divergence, to see if we can get that shift in momentum. And again, in my opinion, that shift in momentum will very much confirm as well when we do get our EMA lines again crossing on our MACD here to get that confirmation. So our question is, what exactly is our next support as far as bouncing from here? Our next support, in my opinion, is here at 374. As you guys can see here on our 374 level is exactly when we did bounce, and we did have our bounce back in the market. Again, as you guys can see, having our bounce back, gapping up, getting our engulfing candle to the upside, even though it was a red one, still respecting our 20-day moving average here and did continue on higher. So again, that is what we'd be looking for from here. In my opinion, if we're going to bounce back, we want to see some type of bullish move, whether it's here or continuing on above 391 for more confirmation on momentum. Then in my opinion, that's exactly what we'd be looking for our 20-day moving average to start to curl back up, to ultimately cross back over our 50, and again, respect our 20-day moving averages as we did previously. So again, just looking for that confirmation, looking to see if we can continue to respect our 20-day moving average as we did previously, and looking for our 20-day moving average to curl back up. For now, we are leaning bearish since we are sitting on an engulfing candle to the downside. If we continue on below 374, I cannot say that we will break new lows of the year, but I will say that there's not many supports on the way to the lows of the year here at 360. So if we do have this major pullback, again, just looking for bullish divergence even from here, even if we do continue on lower, not exactly what we want to happen. But if it does happen, again, like I said, if we come back down, possibly retest lows of the year and then possibly flush lower, we will be looking for those bullish divergence. Again, looking for lower lows here in the market as we are getting higher lows in oversold territory with those possible triple bullish divergence, since we did get double bullish divergence previously. For that confirmation, again, breaking above and out of oversold territory will be very key here. So again, making sure we are staying focused on candle structure, stay focused on our data every single day is what we will continue to do here on the channel. Now, again, with all of that said, we have Powell speaking this Friday. We could have a relief rally leading into Friday, or we could have that flush through a 75-point base rate hike. Again, like we mentioned yesterday, will we digest above our 391 level, possibly break above our 20-day moving average, and possibly continue on up from here on subtopic consolidation since we didn't get a 100-point base rate hike? Or are we going to continue on lower here with a possible negative outlook with Powell speaking? Now, again, with that said, if you are a day trader or you are looking for very volatile breakouts that we mention every single day in the Instabulls room, go to instabulls.com in the description below, and only for $15 a month. As bad as this market is, you guys got to be in the Instabulls room by now. If you guys are not in the Instabulls room, then I love you regardless. And if you guys are in the Instabulls room, you already know I love you guys. I hope you guys know I love you. I'm always trying to look out what's bad. I hope you guys know I'm looking out for you guys as much as I possibly can. Hope you guys see that in the alerts. And if you don't, I love you guys. I hope you guys know that. I appreciate everybody that has been supporting the channel, truly. And again, if you guys do like this video, it does help the channel grow, and I do appreciate it very much. And again, God bless you all, and I'll see you guys in pre-market.